Yo, what's going on, guys? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell. I really appreciate it. As always, I'm not a financial advisor. Do your own research. You would appreciate it in the long run. So do your own research. I am not a financial advisor. This information is for entertainment purposes only. So yeah, do your own research. But yeah, so Friday, end of the week. I think we had a pretty solid week in the market. Um, we only have like one more week in the year as far as investing, getting your portfolios together. This has been a really, really, really strong year in the market. The S&P is doing well. The NASDAQ is doing really well. The Dow's doing well. So Friday, let's just kind of see where we ended the day. And then I want to jump into this Robinhood portfolio because we reached a milestone today in our small trading account. So I want to touch on that, but let's just jump right into Yahoo Finance here, just to give a little background on what went on today. And as you see here, the stock market clinched 8 straight winning week as inflation nears Fed target. So 8 straight winning week. There's still some people that's not investing or scared to invest. I just don't understand why. But anyway, the U.S. stocks edged mostly forward to end the trading session Friday, recording an 8th consecutive week win. This week's gains were clinched following the release of the Federal Reserve preferred inflation reading, which showed pricing pressures continue to cool in November and are approaching the Fed's 2% target. So, you see a lot of people, political talk, inflation this, inflation that. Well, inflation is actually coming down, but you don't hear about, you're not going to hear about the positive sides too much. So you got people still talking about the price of eggs and the price of bread and this, that, and the third. But, just follow the money. The Dow Industrial Average slipped under the flat line, falling less than 0.1% on Friday. The S&P and the tech-heavy NASDAQ advanced about 0.2% for the week. The NASDAQ, 0.2%. And then for the week, the NASDAQ gained 1.2%. The S&P rose 0.75%. And the Dow rose a modest 0.2%. So a fresh read on the personal consumption exponential prices index Friday morning showed that the prices, including the volatile categories of food and energy, rose 3.2% from a year earlier in November, down from October's revised annual gain of 3.4%. Analysts had expected 3.3% annual increase. So, and you see here, as Yahoo Finance Jennifer, Skonberger noted Friday, this data likely clears the path for the central bank to cut interest rates next year. And you see here it talks a little bit about Nike and some other things, but in regards to inflation, it looks like they've gotten it under control, which is going to be healthy for the stock market going into next year. So just keep your eye on that. Like I said, this was a strong year in regards to the market anyway. So I'm excited for 2024. And, like I said in the previous video, I've made back all the losses that I had in 2022. So 2021, I saw my portfolio hit all-time highs. 2022, we had a serious pullback. But the key during that time frame was not to jump out the market as most inexperienced investors would do, but is to restructure, rebalance your portfolio, eliminate the BS stocks, the penny stuff, the stuff that's really not really doing you well, not solid companies. Especially you'll find out what's solid and what's not when the market starts to pull back. So that was the adjustments we made this year. And actually, we'll started making those in 2022 and continued on, especially in the beginning of 2023. And now we are seeing those adjustments and those changes and the rebalance of the portfolio pay off now because we're up big time in the market. And like I said, we're up higher than we were in 2021. And that's just due to consistency, to keep investing, and to restructure your portfolio. The Dow has hit all-time highs, but the Nasdaq still has a way to go before it hits its all-time highs that it reached in 2021. So to be ahead of where we were then is definitely a positive sign, and I'm expecting a big 2024. But look, this video is about a milestone that we reached in my Robinhood portfolio. So we started really taking the Robinhood portfolio serious probably about 4 or 5 months ago. We was at about 1,500, 2,000, probably in that range, where I said, you know what, let me start really putting some time into this Robinhood portfolio. I wanted to start learning how to trade options. I wanted to start picking some good stocks to have and ETFs to have long term. And I have a little bit of crypto in there as well. So I wanted to balance it out between those three with options, crypto, and my long term portfolio. So that's what I started doing. And I just want to see how it was going to go. And for those who trade options, that that's an up and down process. Some people, you take a couple losses, you don't recover. You're like, nah, this ain't for me. The stock market is a scam. This stuff is a scam, blase. So I've been investing long enough now to know that it takes some time. You got to take your time, research. You're going to have some ups and downs, especially when learning something new with these stocks. And that's how it's been going for me with the options. So it's I'm up 1 week, down 1 week. I may be down 2 weeks, and but I know I gotta keep. It's a learning experience. So, but yeah, let's jump right into the Robinhood portfolio. And like I said, we did hit a milestone. We hit the 5K mark. And as you see here, we are up over 5K total right now in the market in this portfolio. And you see here, I have a couple of call options open here with Google and Amazon. Got them for a few months out of the money right now. But let's just take a look and see how those have done so far. Google, I took profit on a call option the other day and opened this new call option. So that's one of the things that I've had to learn, is learning when to take profit, or learning to take profit, because I have a tendency to hold. And I watch my profits just dwindle down. So I can't fall in love with the plays. Once it hits a certain percentage, I need to go ahead and take profit. So let's take a look and see where we at right now with this play that I just opened up. You see it's a Google play. And today we had a good day. It was up 5% today overall. Total, we're up 8%, $52. We bought this on the 21st, which was yesterday. So I think that's a good return for one day, right? You see the expiration date, it doesn't expire until April. This was the average cost. This is what it's worth now. You see the current Google price. So yeah, I think that's been a good play so far. There's some of the numbers, the Greeks and stuff like that, for you experts out there. But like I said, that's what I bought for. One contract at $5.98. That's $598. And you see now it is worth $650. So that's the value of it now. So in one day, I think that's a good return. We closed out our last Google play at 78% profit. So I think that was pretty nice returns, right? So I use some of those returns to add to my long-term portfolio that's also in this account. Let's take a look at our Apple play. The Apple play we've had open for a little while, I believe. You see the current price. You see the price we bought at $4.25, which is $425. And you see right now the value is $5.05, which is actually $505. Today we was down 7%, but overall we're still up 18% on this play. And I have plenty of time, so this is one of the ones I'm probably going to hold for a while. But it all depends. It all depends. I want to get, and I probably could have closed this out previously, but we'll see how it goes. So I have plenty of time. So, and it's an Apple play. Apple's one of my favorite stocks. So we'll see how that plays out. Once again, so far we're up 18% on this play. And the option plays have been one of the reasons I've been able to cross over the 5,000 mark. So let's just see for the week. We're up 7%. We're up $351 for the week. As you see, although the market is closed, I do have crypto in this account. So you see that the balances, it still changes. It changes because crypto, you trade 24/7. So I have some Ethereum. I have a little bit of Bitcoin and just some Doge in this account. Let's take a look at what we've done for the last month. A really good month in this account, up 15%. So coming on strong at the end of the year, up $682 over the last 3 months, up 21%, $907. So we've had a really good 3 months, and overall year to date, you see that we're up 59%, $1,875. And it's just when we started just taking the account serious. So I've had some automatic buys that I've had, just automatically buying shares and just learning the ins and outs on some of these option plays. I'm nowhere near an expert on options. I consider myself a beginner, but I'm learning as we go, right? So up 59% year to date on this account. I think that's pretty good. And we're up over 5,000 now, but I've been investing long enough to know that can go down anytime. We can dip below 5K. We can go to the next goal is to try to get to 5,500. So hopefully in the next couple of months, we can try to push over to 5,500. And by the end of 2024, I want to be in the 7 to 8K range, maybe even more. It just depends on how often I'm investing. So you see the cryptos we have. Well, actually, let's take a look over 1 year. 1 year, once again, up 56%. So we'll go back over here. You see the cryptos I have: Ethereum, Bitcoin, Doge. Let's take a look at some of the long-term positions that I have. I have 61 shares of ET. I have a share, 1.83 shares of VTI, 1.56 shares of QQM. I have 13 shares of May, 15 shares of APLY, and I just bought some AIQ today. I took a recommendation from a gentleman on Twitter, and I like what I saw on AIQ. So I said, let me jump in the game. I think I bought $100 worth, which equaled out to about $3. I mean, I'm sorry, 3.22 shares. So this is my long-term portfolio right here. And just to show you, I'm transparent about the stuff that I do, right? So here are my recurring investments. And right now, I actually paused them. I did this today because I got some things that I want to pay off, right? I got some things that I want to pay off, a little debt that I want to pay off. Therefore, I can invest more, right? So I want to kick the can down the road. So I said, let me hold off for a month or maybe probably about a month or two as far as my recurring investments, and let me attack some debt, get that out the way, and then we'll jump back in on the recurring investments to help build up these long-term portfolios and even some more of these crypto. But I also use some of my winnings, my profit, I should say, to invest as well. So I use some of my Google profit that I made the other day, and I bought some more Ethereum, Bitcoin, Doge, and all of the stocks here, and even the AIQ that I bought today was all for profits that I made from an option play. So, so we still keep the ball rolling. Just right now, we're pausing the recurring investments, and we'll, if we hit profit on, depending on how much profit I want to take on some of our option plays, I'll use that profit to build my long-term positions. So, it's many ways to skin a cat. So it's not just one way. Once you've been in the game for a while, you know there's a lot of ways to build your account. So like I said, this is a small portfolio. I have my bigger accounts in Fidelity, but I did want to acknowledge the fact that we did cross the 5K mark, and that was kind of a big accomplishment for me, especially doing it by the end of the year, and with a lot of those profits coming from these option plays. But let's just take a look at some of the stocks, and let's just see how we've done on those since we've been in them. So just looking at some of the returns. So let's look at ET just to see what our total return is. And you see up 5%. 5%, $40 return. Not bad at all. I'll take a 5% return. Let's go back. Let's look at VTI. Return on VTI is 7%. So we have 5% on ET. Then you turn around and have a 7% on VTI. Let's go back. Let's see QQM. Wow, 12% return. So I don't focus so much on the dollar amount because it all goes about how much you have invested. What lets me know if it's a good investment is just the percentage return. So 12% return, I'll take that any day of the week. Any day of the week. Let's see here. Oh, my bad. Man, and I know what to expect out of these positions. Some I invest in for growth. Some is for income, dividends. So I have a method to the madness for this account. So here you see we're up 8% in our main account, $43. So that's great as well. This is why you don't want your money really just sitting in a savings account, not earning any interest, not able to grow, just sitting there, right? Let's take a look at APLY. I think we're kind of break even on this. Yeah, only down 1%, $3. So, this is a dividend account, which pays me monthly actually. So, I know what I'm in this account for. I think over time, because it does follow Apple, it's going to grow. I'm fairly new in this position, in this fund here. And like I said, I am receiving dividends every month from this position that I reinvest. So actually all these positions pay dividends. ET quarterly, VTI quarterly, QQM quarterly, Main is monthly, APLY is monthly, and I just bought AIQ today, and I think that it's quarterly as well, but I do some more research. So we just, like I said, we just bought it today, only down 16 cents. So we're good to go. So, but yeah, that's all I want to talk about today, man. Just the where we at in our Robinhood portfolio. I'm excited that we crossed over 5,000. I think that it's going to be a really, 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 really positive portfolio for us. And looking at least, I've only done options on Webull so far. I want to start using Moo with the trailing stop loss. I hear Larry Jones talk about Moo a lot. I actually do have a Webull account. I just don't have anything over there just yet. I think I have one position over there. I've heard a lot about Webull. So maybe in 2024, I can start building that portfolio up over there as well. I haven't looked at Moo like that. So, but I've heard a lot about it. I think I'm gonna check it out a little bit more in 2024 as well. So, I'm a big fan of Larry Jones, and he talks about Moo. Stocks with Josh talks about Moo a lot. So, I'm always down for something new, learning something new. But my main accounts right now is Fidelity, Robinhood. I had a TD Ameritrade account that just got transferred over to Charles Schwab. So those are my three main accounts. And like I said, I do have a Webull account that I'll probably start putting a few more dollars into next year. So, but yeah, that's it. I just want to touch bases real quick. We are on the rise in our Robinhood account. And we're going to see how this thing jumps in 2024. See, Robinhood options way better than Webull, but I have my long-term dividend account on Webull. Jared, what do you have? What are some of your dividend stocks that you have or ETFs that you have, and how's that working out for you? Because how I like to do, I don't have an account that's strictly dividends. I know a lot of people do have a dividend account, uh, and part of that is, I get caught up in some of these high yield dividends, and so my strategy is for that, because I know I can take a loss on the cost basis, is to not have them all in one account. So I have some of my high yield dividends spread out in different accounts. So I may have one here, one there, because I know what comes with that. But you do have some safer Vanguard dividends, dividend stocks or ETFs that does really well. So, I'm interested to see how people um, build their dividend portfolio. So let me see if I can pull up. Why did you transfer stocks? And I love dividends as well. Why did you transfer stocks? My my TD Ameritrade portfolio, I think TD Ameritrade was bought out by Charles Schwab, so they transferred those positions over to Charles Schwab. So I didn't even have a Charles Schwab account, but I had to open one up because they transferred the positions over to Charles Schwab. And I only had two positions. What was it? AMZN, not Amazon, but it was another ETF. I only got two ETFs over there. They both pay monthly dividends though, but they're solid. They don't really lose a lot of value in the price, so I'm okay with that. TSLY, Yield Max, PEP, EPDET, more VNQ. I have 20 positions now. Okay, cool, man. Let me tell you about TSLY. I like TSLY, but that's the yield max that follows Tesla, and you know how much Tesla can go up or down. And I think I got caught buying that TSLY too high actually, and I got hit pretty hard. on that. I'm not gonna lie. I do like it, but I did have to give it up, and I switched it out with what's that? Let me see if I can pull up my Robinhood account. Bear with me 1 second. Not my Robinhood, but my Fidelity account. I can tell you exactly what I switched it out with. I switched it out with QQQY. So that's what I had. That's what I have now instead of the TSLY Yield Max. But I do like it. I took a big hit on it. I think I bought in around $16 and it dropped down to like 11. So I went ahead and just ate that loss, transfer whatever else I had into QQQY, and that's been doing really well for me. It loses some value once it pays that dividend as well, but it tends to gain it right back. So I'm doing pretty good on that. So you bought in at 13, but the dividends luckily that put me in a positive position. That's good. So you bought it a lot lower than what I did. So, but you understand what I'm saying. So, but yeah, man. And I think Tesla's going to go up. I think Tesla's going to have a big year in 2024. So I think that price is going to keep rising in TSLY. And I may get back in it. I just don't want to fill my portfolios with those yield maxes. But I do have the yield maxes. I have quite a few of them, actually 4 or 5 of them. But I have them spread out in different accounts. So let me just look at this particular account. I have JEPQ, I have SPY, I have BRKB, which is the Berkshire Hathaway B. I have QQQY, Waste Management, WM and SMH, right? So that's one of my portfolios. So I like to spread it, with strong ETFs. Then, I have a few of the high yield dividends, and then a few of the solid dividend companies like, Waste Management, QQQ. I'm sorry, SPY is solid. I think JetQ is solid. It's been proven to be a solid position. So then, I have some ETFs with SMH and SPY. So that's kind of how I like to shape my portfolio. So yeah, let me see what else. Just to give an example of another portfolio that I have. Let me know what you think about this. And this one's only have 4 positions, right? Another one of my portfolios, AMZY, SCHD, AMD, QQQ. So 4 positions, only 4 positions in that portfolio. But it's all about what you have, right? I'm trying to do quality over quantity. So SCHD, which is a very popular ETF. Then I have AMD, which I'm up like 28% on this position. I bought in at 108. It's currently trading at 139 right now. I have QQQ, right? I'm up 11% on that position. Bought in at 366, currently trading at 408. Then I have AMZY, right? A yield max for the Amazon. And I'm up 10% just on that position alone. Bought in at 1947. It's at 2144. So do I believe in REITs? Yes, most definitely. At one point, I had a lot of REITs. I don't have as many now. What I have, I think I just have the main in my Robinhood account that I just talked about. That may be the only REIT that I'm holding right now. Let me just check. Let me double check since I got my Fidelity accounts pulled up. That might be the only REIT that I have right now. Let me see. Yeah. Yep. That's the only REIT that I have. It's just the main. But I know O is a popular REIT. A lot of people like O. I used to have quite a bit of them, but I kind of, as I was readjusting my portfolio, I got out of a lot of REITs. But real estate investment trusts, I do believe in REITs for sure, most definitely. I bought in at 13, but the dividends luckily have put me in the pot. Yep. 400 shares of TSL. Oof. Yep. I use those dividends to feed my PEP, so I can use cover calls on PEP. Gotcha. That's a smart strategy. In one of my accounts, I do have, after what really got me into investing, right? I used to work for E-Trade. I worked for E-Trade for like 5 or 6 months, right? And I didn't know anything about investing, any of that, right? But I was like, man, I need to learn, right? So I'm taking these calls. I was a customer service rep, and this was probably back in 06 or something like that. So like over the next 10 years, I was just trying to find my way. I didn't have any strategy. The internet, you didn't have a lot of information online like that. But getting into the cover calls this year, that's another thing that I did, right? Because I bought Amazon, I bought Google. Like those are some of the first positions I bought were like real money, right? So I bought Amazon, I bought Google and Apple back in 2016. I still hold them. Over time, they've done, splits and things like that. So now I have over 100 shares of Amazon, over 100 shares of Google, and I'm able to do cover calls on both of those, right? I'm at for my personal account, I have about 91 shares of Apple. So I'm trying to get to 100 shares of Apple so I can do cover calls on those as well. But that's another form of income that I've been learning this year. And man, I've had some good days. I've had some bad days with the cover calls, but I'm learning, about rolling. One of the first times I got caught up in trying to roll over some Amazon, and it messed me up big time. So I had to learn how to roll over those cover calls and when is a good time to to do one to collect income. I mean, it's just a learning curve that I've been going through for the last 4 or 5 months. But I'm glad I jumped in because I've done quite well. I've done quite well with them. So it's just those days when they hit you. You know, they go up real quick, real fast, and Google can do that. Google just jumped from 133 up to 141 or something like that in the last couple of days. So that kind of, so I had to go in and make some adjustments with that. But I have some cover calls now out until February on both Amazon and Google. So, sometimes I have to take some debits on them, but it's usually for protection purposes. I usually make the real money on my, when I collect that income, and I can build up some other positions off the income that I've made off the cover calls for Amazon and Google. But once I get that Apple over 100 shares to do cover calls on Apple, I think that's going to be a game changer for me. So, it's going to come. I think first quarter of 2024. I'm gonna try to get to that 100 shares of Apple, and then we're going to be working cover calls of Apple on Apple as well, along with the dividend income that I receive every month. So yeah, man, it's a process. It's a process, but you got to be in the game. You got to be in the game to win the game. So, and a lot of people don't even get in the game, participate in the game. So, and I think 2024, we're going to see some, it's an election year. I'm not an expert or anything, but I think it's going to be a big year in the stock market. So I hope you guys are prepared. I hope you got your portfolio together, and let's make some money this year. So, or next year, I should say. So, but that's all. Remember, guys, to like, share, subscribe, hit the notification bell. Not a financial advisor. Do your own research. And I will talk to you guys later. Before I go, plus ultra, I don't do margin. I leave it alone because it's just not my forte. So I only trade really with the cash that I have available, because I don't want to get caught up in those margin calls, and that can be a whole different ball game. So I leave that to the experts. But yeah, guys, I'm gonna talk to you guys later. I'll be back this weekend with another video, and that's it. Remember to like, share, subscribe, hit the notification bell, and I'm out.